And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
So then what do you think some of the best real estate markets are in the US?
Yeah, I think suburban locations. People want to live in suburbia. Suburbia has become cool again. You know, America is really known for suburbia because after World War II, we had Levittown. We're one of the few countries really on earth that is big on suburban living. Okay.
That's so people fleeing the big cities.
Yeah. That's not true around the world like it is in America. It exists, but not like it does here.
Right.
And so these good linear suburban markets, of course, we have many markets in Florida that we're helping investors buy properties in. And by the way, that's what my company does. We help investors build nationwide real estate portfolios. Right. So, of course, many Florida markets are fantastic. Texas, good, not as good as it used to be. It's gotten a little expensive. Of course, the property taxes are pretty high in Texas. You know, Tennessee, there are some great markets in Tennessee. Georgia, there's a little bit. Indiana, there's still some good stuff. These types of markets, and you know, shameless self-promotion here, go to jasonhartman.com for more on any of this stuff.
Yeah, and we'll make sure we'll put that down there. Now, what about strategy? So, you know, early on in my real estate career, I got smacked really hard in the 2008 crash, and I learned that there's no such thing as good and bad timing. Yep. It's just good and bad strategies. So when the timing changes, you just change your strategy. Yep. So when I was building homes, and then in 2008, when liquidity dried up, that wasn't such the good best place to be, but buying distressed assets was, right? So what do you think the right strategies are for these markets? Like cash flow, rentals, Airbnb rentals, like what are you seeing there?
Great question. That is the $1 trillion question, of course. But, you know, my answer to it would be, we talked earlier about my 3 dimensions of real estate, and I didn't quite finish the idea. Okay. So, you know, the beautiful thing about income property is you can adjust your strategy based on what's going on outside in the marketplace, right? And in the economy. So when we're in the market we've been in over the past several years, which is a capital gains market, you know, you make big gains and you do what I call refi till you die. That's another strategy I teach. You pull that equity out, you make it work for you. You know, maybe you buy Bitcoin, maybe you buy more properties, whatever. You want to have your equity working in those capital gains markets, or maybe you just take gains and take it off the table and sell. But in a market where prices soften, that tends to actually push rents up. Because remember, people only have 3 choices. They can buy, they can rent, or they can be homeless. And nobody wants to be homeless. So if it's more of a rental market, you sit back and you collect your cash flow. I think it's still a good time to maximize the mortgage opportunity. I know people might think, Jason, the rates are so high, I should just pay cash. No, you shouldn't, because the official rate of inflation is still dramatically higher than the 30-year fixed rate mortgage. So stock up on those cheap 30-year fixed rate mortgages and take advantage of inflation-induced debt destruction. It's a beautiful, beautiful thing. So the strategy is buy more properties. I'm still a buyer. I've been buying properties. I got 2 that I'm doing right now personally for my own portfolio.
I closed on a couple this year as well.
Yep, good. And just, you know, be smart. You always have to be smart, stay informed, listen to Mark's show, follow his YouTube videos, because things do change, of course, and get those 30-year fixed rate mortgages. And I think we're going to see quite a bit more in terms of price appreciation. But if we don't, then sit back and watch the rents increase as there's upward pressure on rents, because the people are forced to stay in the renter pool because buying is not attractive to them. Yeah. So that just puts upward pressure on rents. Either way, you win as long as you adjust your strategy.
Now, most of this, I mean, I guess this is there's all types of home buyers. Obviously, we could separate the homeowners versus the investors. Right. For example, I bought a new house for myself and my family. It was not a financial decision. It was a purely emotional decision for my family. If that price of that home goes down by 50%, I don't care, because I didn't buy it based off of financial factors. Now, of course, I look at those, but my home, I didn't approach that way. But let's say that 4 homeowners listening to this, they might try to time this market, which I always think is a fool's errand, but they might say, hey, they got to come down. And I expect prices to drop by 20 or 30%. So I'm going to wait 2 more years and buy it at a 20% discount than it is today. Prices are too high. What would you say to that type of a buyer? I mean,
yeah. It's a great point. I mean, I've been hearing people say that for my entire career. Okay. And I was hearing a lot of people say that in 2015, and look at what they would have missed.
Right.
I mean, look, historically speaking, every 10 years, there's a big giant real estate boom. And if you are not in the game, you're likely to miss it. Think about it. Everybody in 2019, 2018, they were all thinking there was a bubble. When Trump was elected in 2016, everybody was thinking, oh, there's a bubble. The market's going to crash. I'm going to wait. I'm going to time it. And you missed it. You missed it all. Okay. Be in the market, first of all. But the other thing you have to ask is, if there is a bubble, and there will definitely be a correction at some point. There's always a correction, folks. I'm not saying there won't be by any means. There's always going to be a correction. But why is there going to be a correction? Well, the likelihood of why is because mortgage money will get a lot more expensive. And I mean a lot more expensive than it is now.
Right.
So you're either going to get the money cheap or you're going to get the property cheap. You know, it's like the old saying, you're either going to get price or you're going to get terms, but you're not going to get both at the same time.
Right.
So do you want the cheap mortgage or do you want the cheap property? You're going to pay a lot more for the mortgage, or you're going to pay more for the property, one or the other.